Hi, I'm Peter Samuelson with Sawston Wealth Management, and welcome back to part 2 of my series on compound interest and the different risks involved in investing. In the last video, I talked about using compound interest to your advantage to build wealth. In this second video, I'm going to talk about the different risks involved with investing and put some context to definitions to really get a better meaning of it. In this video, I'm going to go over 2 risks, the first being unsystematic and the second being systematic. The recent push by Congress to focus on privacy concerns with Amazon, Google, and Facebook and what information they can store on customers is an example of unsystematic pressure placed on an industry or basket of companies. Another example is if a competitor enters the marketplace and takes business from similar companies. That would make those companies less valuable. The recent push by Congress to focus on privacy concerns with Amazon, Google, and Facebook and what information they can store on customers is an example of unsystematic pressure placed on an industry or basket of companies. Another example is if a competitor enters the marketplace and takes business from similar companies. That would make those companies less valuable. You can mitigate unsystematic risk through diversification. If you own stocks of multiple companies across all sectors, and 1 or 2 fall prey to unsystematic risk, you'll still have others that can do good for you. The next risk we have is systematic risk, also known as market risk. It is a risk that affects the economic market as a whole. Systematic risk cannot be easily mitigated by diversification like its counterpart, unsystematic risk. An example of systematic risk is when the COVID-19 pandemic began. We saw the whole world economy crash and stock prices were dropping, not because of how the individual companies were performing, but because of the circumstances we were going through throughout the world. A few more examples of events that can change an entire economy are war and effects and actions toward climate change. And that is all for now. But in my final video, I'm going to go a little bit into systematic risk and talk about some more specific components of systematic risks and things that you should be aware of when making investment decisions.